And as always, we're going to
let you know what to work on, what to reflect on, and what to improve on the next day.
And as always, we're going to be looking for accurate context.
There we go. Good afternoon, friends and traders. Apologies, had a little technical issue there. Just a glitch, and I need to get some more light in this room I'm in. I'm in probably the smallest room in my house, and I've got these 3 bookcases next to me that are kind of blocking out the window. So I will get some more light in here soon also. So, welcome to the market recap. In case you missed this morning's forecast video, I'll fill you in on some of the broad strokes here. Hoag's on vacation this week, and I've been tasked with covering for him. My name is John. They call me JD. So let's get right into it. It would appear that the markets did not much care for Jerome Powell's comments this afternoon. Stocks took a bit of a hit. Crude oil continued its march higher, and after the Fed chair talked about aggressively raising rates to deliberately slow the economy in an attempt to fight inflation. We saw all this starting to play out. This also sent Treasury yields ripping higher. Treasury prices subsequently went lower because we all know prices and yields move inversely. And according to the Wall Street Journal, the 10-year note yield hit its highest level since May of 2009. Pretty impressive for a relatively slow day, wouldn't you say? A couple more headlines that I saw hit the tape. President Biden is preparing us for a possible cyber attack from Russia. A White House senior advisor, Ann Neuberger, says there is no evidence of a specific cyber attack coming, but says the U.S. is seeing some preparatory activity by the Russians, and provided info and briefings to several hundred companies last week. Also coming out of the White House, the U.S. wants to hear China condemn Russia's actions on the ground in Ukraine. We'll see if that happens. Some more comments coming from the Fed chair. Jerome Powell has said the labor market is much tighter and hotter than pre-pandemic. He also went on to say that you can make a case that the labor shortage will trigger more investment, and he also thinks that that will happen in the service industry and could boost productivity and make high wage increases more sustainable. So we'll see if there's any validity to that also. Just checking real quick. Everybody can hear me, right? Alright. I don't see anybody saying no, so we'll just keep going. Alright, early this morning we talked about that the nickel trader, possible bailout. So I just want to share a quote from a headline with you. A quote from a news article that I picked up. A consortium of banks led by JP Morgan have succeeded in bailing out Chinese commodity giant Tsingshan Holding Group, which 2 weeks ago was facing a potentially terminal margin call of $8 billion, forcing the Hong Kong-owned London Metals Exchange to halt trading and undo billions in trades to avoid putting China's big shot nickel tycoon Zhang Guanganda out of business. So that's what I was referencing this morning on the forecast. I wanted to learn a little more about it before we talked about it, and I did, and it's pretty wild. You could just do a simple web search and you'll find out tons about this stuff right now. Well, what do you say? Well, let's say good afternoon, everybody who's joining us today. Here we go. Who's first in the room? Tachyon, hello. Tachyon's first. Bill Phillips, good to see you. Jay Crockett, Scott, Mickey, Spencer, James, Ricardo. Thanks for joining, everybody. Good to see you all. What do you say we jump into some charts? I'm just going to move a few things around here real quick. And let's take a look at what happened in the markets today. We'll start with the S&Ps. Here is just the March front month, ES front month contract. You could see pretty back and forth day. Still hovered around that 50-day moving average, closed above it for 2 days in a row, unable to get that 5th consecutive day higher, which hasn't happened since early November, if you remember. We did have our last instance of 4 consecutive days higher happen back in mid to late December. Let's switch over to a 4-hour chart real quick. So pretty consolidated trade over the last few 4-hour bars here. Still hovering above that 10-period moving average, which is, I would say, relatively strong still. I'd like to see a dip below there before any changes in consensus. Looking at the 30-minute chart, still sort of inside Friday's value area. We tested Friday's high a couple of times, broke through it just for a second on the open at 8:30 this morning, and then just couldn't seem to get any buying pressure. Then right when Chairman Powell came out and started talking, things kind of went south. Recovered most of the losses. Positive close on the day, strong volume going into the close. So we'll wait and see what happens overnight. We'll see what overnight inventory is leading us to believe for tomorrow. Momentum still pointing higher, volume still a little weak, but again, a couple consecutive closes above that 50-day moving average. Still showing relative signs of strength. Let's take a look at crude oil. We're on a 30-minute here. Let's look at the daily. What a rip. It still seems like uncertainty in Europe is really just driving this market higher right now. Scale down to a shorter time frame. 4-hour chart, just marching higher, very few pullbacks. I don't know if you heard that bang in the background. We got a new puppy a couple weeks ago, and she loves destroying my house. But yeah, just marching along this VWAP here in these last couple 4-hour bars, hovering above the 10-day moving average. Only hasn't tested it since right on the overnight open last night. So we'll see what's the 30-minute looking like. So we broke above yesterday's high early, never really gave back any ground. Sort of moving sideways these last couple bars here. Consolidation here from a bit of a consolidation earlier today, and then just creeping higher. This 113, I believe this is 113.10 level for the weekly kickoff high. That's our next target in crude oil. We'll see what it looks like on. Yeah, momentum still pointing higher. Volume still pretty weak. I don't know how people are trading this market. It's so thin right now. And there was a comment in here, I believe. Need to stop from Ricardo. Need to stop trading crude oil or make my stops higher, which I don't like doing. Yeah, you need some deep pockets to trade this market right now. That is for sure. Not the kind of risk I'm looking for. How about the NASDAQ? NASDAQ singing the same tune as the S&P. Still just marching higher. Sort of a consolidation day. We saw this little break after Chairman Powell's comments came out. Kissed the 10-period moving average on a 4-hour chart. But for the most part, this looks like consolidation to me. Maybe a possible bull flag setting up. Let's scale down to a 30-minute here. Again, tested Friday's high. Never really traded inside Friday's value area pretty much the entire day. Just grinding choppy sideways. Spencer, it's not like he wasn't good for the nickel, but margin rule said he had to put up a lot of cash to keep his position. Yep, and that is, therein lies the rub, right? On to continuation chart. second consecutive close above the 50-day moving average. Looks like the VWAP is still slightly above the 50-day also, and momentum pointing higher on a slight increase in volume. Sort of bullish, sort of choppy still. We'll see. Our next target area is going to be weekly kickoff high around 14.6. What do we need to see crude oil be tradable again? I think we need a little stability coming out of... I think OPEC needs to take the reins and boost production to meet Western demand. That's the only thing that's really going to bring stability back to the market. Sure, there's things we can do here, but I just don't see that happening right now. So really, like I said earlier this morning, I think the ball isn't OPEC's court for the time being. Now let's move on to... what's next? Let's take a look at gold. Gold still in this consolidation period on a daily. This is a continuation chart. Momentum slightly bearish on low volume today, but still sort of just still a sideways grind in this market right now. You could see this ever since early last week. Not much of a range. We've been inside weekly kickoff levels for the last 2 weeks, I want to say. The call was for a sideways move this week, and that is still the bet. Traded inside Friday's range for pretty much the entire day. Went to test this high. Looks like I might got a ticket taken out by a tick or two, or maybe just shy of Friday's high. And we're still back inside value from Friday. So this is a choppy sideways trade for now, still also. Lastly, let's hit up the Treasury markets. So this was in consolidation for a couple days here. We talked this morning about taking out Friday's low because it just felt like a heavy market going into this morning. Let's take a look at the 4-hour chart. There was a sideways trade going on, just kissing this 10-period moving average. Feeling heavy, like it wanted to go down. We sort of knew if it took out this low, it was going to, and sure enough, once Powell started talking, that's exactly what it did. Look at that. Broke through the 3-day low. And it just looks weak right now. This should potentially help stocks move a little higher. We'll wait and see what happens there tomorrow. Let's take a look at this continuation chart. Yep. Broke right through this little consolidation area. Hit some stops down here. And, yeah, put in a new 3-day low. Momentum still on the lower end. You can't call that oversold yet until it starts moving higher. But volume looked decent. And I think we could see continued weakness in the 10-year. So we'll see what happens overnight, and we'll cover that again in the morning. Alright, now I'm going to shift a few things around again, and take a look at the chat, see what's going on. Alright, so earlier today, we all kind of knew today's session would likely be a headline risk type of day, and that's exactly what it turned out to be. With the economic calendar so light again tomorrow, I would expect more of the same. So keep your eyes on the news. Now, I know one of Dan's favorite things to do was what happened on this date. So we'll close it out with that. What do you think? On this date, March 21st, 1963, was the closing of Alcatraz Prison. The U.S. federal prison on San Francisco Bay's Alcatraz Island, which held some of the most dangerous civilian prisoners, including Al Capone and Robert Stroud, aka the Birdman of Alcatraz, was closed. Also, and I thought this one was pretty interesting, on this day, Twitter founder Jack Dorsey, this day in 2006, Twitter founder Jack Dorsey sent the first public tweet, which read, "Just setting up my Twitter." If we only knew then what we know now, right? So with that, I'm going to close it up. Anything coming in the chat? The charts were low res. Yes, I switched it up a little bit. I did a test run, and when I initially started streaming, the live stream kind of crashed on me a little bit. So I had to take the resolution down. I'm going to work on it again today, figure out what the real problem is, and I'll get the resolution back up again tomorrow morning for you guys for the forecast. But we're on it. I hope the sound was a little better than it was this morning. I spent some time making some adjustments there also. But let me know. Put your questions in the comments section. And I will get back to you guys first thing in the morning. With that, have a great day, and I will see you all later.